Well, good day, subscribers. Hope you guys are having a great day out there. I want you to take a moment with me. And imagine this scenario. Imagine a scenario where you wake up in the morning and you don't go to work because you have to. You go to work because you want to, or you don't go to work because you don't want to. And the reason being, the reason you can make this decision is because you have enough money that is constantly building you more money through dividend stocks that literally you can pay all of your bills with just dividend money that is constantly coming in. That is a scenario for some folks out there, and I'm going to teach you guys exactly how to do this step by step here today. How to actually make a living from just dividend income, which dividend income essentially is money that's paid out to you from different stocks out there, okay? So like, let's imagine like Coca-Cola, right? Coca-Cola is a stock you can buy, okay? Like any individual out there can buy Coca-Cola stock. Coca-Cola pays dividends every 3 months. You can go ahead and take that money and you can reinvest that money into more stocks, or you can use that money to spend on things out there, okay? So that's what a dividend is, and literally there are people that like make so much dividend money that they don't have to work a normal job or something like that, and that might be an ambition of yours out there. So if that is, I want to at least teach you guys how to get there, okay? So work can be more of a decision you do rather than something you have to do, okay? So here's how I kind of think about it, all right? You need to be making, if you're a single person, you need to be making around 50K pre-tax, roughly. You know, maybe you can go down to 40K pre-tax, somewhere around there, which would leave you about 40K post-tax from dividends alone, and you could live in 98+% of the world, okay? There are certain areas you might not be able to make it on in that much money, like Manhattan. 40K is probably not going to be enough straight up. If you live in San Francisco or Monaco, or certain areas like 40K, you know, basically after taxes, will probably not be enough to live a nice lifestyle. But in 98% of the world, you can live a nice lifestyle on 40K. If you have a family, maybe somewhere around 60K roughly pre-tax, that leaves you with about 50K or so post-tax after you pay your taxes on your dividends. Once again, 98+% of the world, you can live a decent lifestyle. No, you're not going to be a flashy lifestyle, but you can live a decent lifestyle and not even have to work, okay, in 98% of the world, which is a pretty amazing thing, and that is definitely achievable, and there are definitely people that have achieved that, okay? So what I want to go through is, what do you actually need? What are the 5 things you need to be able to pull something like this off? And then we'll start getting into the mechanics and how you actually do this, guys. I hope you really enjoy this video. Make sure you hit a thumbs up, and let's start getting into it. Alright guys, the first thing you are going to need, the first thing that is necessary, is you need to have some sort of savings, okay? It doesn't have to be a lot of money. You don't have to have like $100,000 saved or $1 million saved or something like that in a bank account. No, you just need to have some money saved. It could be $1,000, it could be a few $1,000s. Now you have kind of saved away that you are ready to invest that money and start building that money into more and more money through dividend stocks, okay? You have to have some sort of money, otherwise it's not an investment, right? In order to be an investment, you have to have some money that you funnel into something that can hopefully build you more and more money. So you have to have some sort of savings. I hope you guys do have some sort of savings. If you are watching this and you have literally no savings right now, you don't have like even like a few $100s to your name, okay? You need to either get a better job or get a job, period. Maybe you don't have one yet. You could start a side income project. I mean, search up passive income ideas. There's so many ideas. Or you might be in a situation where you have a job, you just aren't being able to basically funnel enough money into like a savings account or something like that to kind of build savings. And then you got to kind of look at your expenses and say, what can I do to get my expenses down? Or you can look at your income and say, what can I do to make my next move to, you know, get a job that pays better than what this one pays? Or do something like, how do I start a side project over here, a side income stream or something like that? You got to either fix the income or you got to fix the expenses. It's one or the other, and it's different for different people. Some people have really big incomes and they spend all their money. They never have any money for investing because they even though they make, let's say, $10,000 a month or $20,000 or whatever, they never have any money to invest just because they're spending it all. You don't ever want to be in those situations. So you need to have some savings, okay? That's number one. Let's get into number 2. Alrighty guys, the second thing you have to make this work is you have to have a situation where you have at least a few $100s, if not $1,000+ each month that you're able to funnel into stocks to build more and more dividend income, okay? It can't just be, you know, you put in some money at first and then there's no money being funneled in, and so you're just building off of what's coming in for dividends. That's going to slow things down in a massive way. If you want to speed up the process really fast, make sure you're in a situation where you have at least a couple $100, if not $1,000+ each month that you can funnel into building more and more dividend money. Compounding is absolutely an amazing thing, okay? As a snowball gets gets rolling, it gets to be bigger and bigger and bigger and bigger with the bigger amounts of money, okay? So if you can speed up the process by putting at least a few $100s or $1,000+ into your brokerage account each month and building the dividend stocks bigger and bigger, it's gonna help so dramatically. And the speed, the time it takes to achieve what you want to achieve is gonna happen so much faster, guys. So this is so key. And once again, if you're not in that situation, that's fine. You just gotta figure out, do you have an income problem or do you have an expense problem? It is one of those two problems at the end of the day. Some people, it's both problems. They aren't making enough money, and on the expense side, they're racking up debt and things like that, okay? Which brings me to one other real quick point I'll make, which is make sure you guys are staying out of debt, because if you're racking up a lot of debt, especially if you don't know what you're doing with it, like, it's gonna hurt you really bad. You're racking up debt at an 18% interest rate. How are you ever gonna build money, because you're paying that interest rate constantly, okay? So that's number 2. Let's get into number 3. Alrighty, guys, the number 3 thing you're gonna need is you're gonna need to know how to pick stocks decently, okay? You don't need to be the world's best stock picker out there. You don't need to be absolutely killing the market and oh my gosh, you're outperforming. You just need to be like a decent stock picker. You need to know all the things to look for in stocks, okay? Now, I have a course linked in the description that goes into everything I look for in a stock. I've been in the stock market for over 10 years. That will save you 10 years of experience basically in one course you can learn from if you binge watch in a day or two, okay? But if you don't have the capital to, afford a course like that, there are tons and tons of books out there you can read. Go to your local library, start reading books. It's going to take you a long time to kind of get all the knowledge, because you're going to have to pull from a lot of different places. There's not really just like one book I can point out and say that book, it covers everything you need to know. There are a lot of good books. Intelligent Investor is a good book, but there's no one specific book out there that I can say that book's going to tell you everything you need to know. It just doesn't work that way, guys. So you're going to have to learn how to pick stocks. That's going to take you some time, okay? Depending on which route you kind of go. It could take you many months to learn the information you need to know. It could take you honestly years to get to the place where you know how to be at least a decent stock picker out there that you can kind of perform with the markets, okay? So that's the number 3 thing you're gonna need. Let's get into number 4. The number 4 thing you're gonna need if you wanna build a dividend portfolio that you never have to work again is you're gonna need time on your side, okay? This is a very, very key thing, and this isn't gonna be as much fun if you're like, let's say 45+ years old and you're watching this video right now. This is a lot more fun if you're someone that's watching this video and you're under the age of 30 right now, because I can tell you if time is on your side, the compounding numbers get to become so much easier if you have time on your side, and how you can start to build the money and start to build out these dividend stock positions from just very, very small positions to over 10-year span, 15-year span, 20-year span to absolutely massive positions. So you absolutely have to have time on your side. It's a really hard thing to pull off if you're 45+ years old. You can pull it off, but you'll need a bigger amount of money to start off with, or you'll need a lot more money to funnel in the stocks, or you'll just be in a position where you don't get to that place where you have enough dividend income till maybe like you're 70 years old or so, rather than imagine if you're 20 and you start this. By the time you're probably 40, 45, you have enough money coming in constantly from dividends that literally you don't even need to work anymore by the time you're 40, and you can do what you want at that point in time, okay? So definitely, guys, I cannot reiterate this enough. Time has to be on your side to really make this work in the full retrospect that you can have success in this, guys. While you're young, and it's like, imagine you're 40 and you don't have to work anymore. That's real cool. You're 75 and you don't have to work anymore. Well, that's what is expected, right? You're 45 and you don't have to work anymore. That's a really cool thing, guys. Let's get into the last one, number 5, and then we'll get into the mechanics. Number 5, the last one, so vital, guys, it's discipline. If you're gonna pull off something like this that's gonna take you 10, 15, 20 years to pull off, you need a lot of discipline. You need a lot of focus on the long term. You can't get thrown off and start buying stocks that are maybe growth stocks or something like that. Like if you're trying to build a massive dividend portfolio, then you need to stick to great dividend stocks. You need to limit as much risk as possible in these scenarios, okay? Now, it's not just discipline within the stock market, it's discipline out of the stock market. We talked about debt just a minute ago, right? Making sure you're not taking out a ton of debt, because guess what? If you're taking out a ton of debt and you're buying a new flat screen with that or something like that, right? Or a new couch, and you're taking out all this debt, you're not gonna ever be able to funnel a lot of money into stocks. It's gonna slow your way down. It's undisciplined moves, right? Things like having health insurance could also be a disciplined move. Imagine you have something happen to you, essentially bad, right? Health related, and you don't have health insurance. Guess where you have to pull money out of? You're probably gonna have to pull it out of your dividend portfolio. So it's a vast amount of staying disciplined in retrospect of like what's going on in your everyday life, as well as what's going on inside that dividend portfolio, guys, if you're gonna pull a move like this off, okay? Now let's start getting into the mechanics on how you actually pull this off. Alrighty guys, now that we've talked a bit about like what you need to pull something like this off, now we got to talk about the mechanics on how to actually do this, okay? So let's assume in the scenario you've got like $5,000 socked away in savings, okay? You need to basically open up a brokerage account. If you have smaller amounts of money, I would usually suggest like Robinhood because it's free to place your trades, so you don't have to pay that commission every time to buy and sell stock like a lot of the other brokerages out there, okay? So that would usually make sense for most folks out there. You put the $5,000 in, obviously make sure you're comfortable investing, make sure you know everything to look for in stock, and make sure you've actually done your research before you ever buy or sell stocks, okay? Otherwise you'll end up selling at really bad prices. You'll make a lot of bad decisions if you don't know what you're doing, okay? So you put your $5,000 into some dividend stocks, a few out there, maybe 2 stocks, 3 stocks, maybe up to 5 stocks. If you got $5,000, you could always do something like put $1,000 in each one, okay? So 1 year is going to go by roughly. You'll receive around roughly $200 depending on the dividend yields. If you go super high yield, you could get a lot more than $200 in dividends, but that might be a little more dangerous. If you go low yield, you might get less than $200. It really depends on what you're looking for. If you're looking for super high yielders, I always suggest kind of looking for the dividend stocks that you believe in the most for the long term, because those are ones are going to be able to up their dividends likely for years and years into the future, rather than just somebody that's making a lot of money right now and paying out a huge payout ratio or something like that. And then, as we spoke about, you got to always make sure you're funneling money into your accounts. So somewhere around $1,000 each month funneled into that account. I feel like a lot of people out there could pull this off. It's just you got to focus on that income, or you got to focus on the expenses, one of the two, or focus on both, getting those expenses down and getting your income up. $1,000 a month put toward dividend stocks is certainly possible. I used to do it at Quick Trip all the time. I used to do more than $1,000. I wasn't doing it just toward dividend stocks. I was doing it toward stocks in general. And that was just an average job, making 50, 60K a year essentially. And I was able to put at least $1,000 a month towards stocks, some months even up to $2,000 plus towards stocks, okay? And that was with paying bills. Now, that's gonna leave you after year one with about $17,200 in those dividend stocks, okay? Year 2 goes by. Now you're going to receive about $800 in dividends roughly, depending on the yields. Why? Because generally the yields are going to go up. So if you buy stock ABC and it pays, let's say, 3.9% yield right now, or let's say in dollar amounts. Let's say that stock pays 50 cents a share right now. That's a great dividend company. They're more than likely going to up that dividend each and every year. So if it's paying 50 cents this past year, more than likely this upcoming year, they're going to bump that up to maybe 52 cents or 54 cents a share, okay? Because most of these great dividend companies, they up their dividends each and every year. So what was an old dividend of 50 cents might now be 54 cents, which might be in a year from now, or let's say 10 years in the future. Let's go 10 years in the future, it might be $1 a share at that point in time, okay? So yield's going to get bigger. Also, your amount of money you have invested in these dividend stocks is a much bigger amount. So the amount you're going to receive in dividends is going to be more substantial. So about $800 you received, you put another $1,000 per month toward new dividend stocks or old dividend stocks. It depends on what you want to go after. If you want lower cost based on stocks, that's always a great thing if it's a great company out there, okay? There are always plenty of discounts, okay? So now after year 2, you have $30,000 in dividend stocks after 2 years, okay? So you went from not much to a lot in basically a 2-year span. Now, going into year 3, you're going to receive $1,500 just in dividends now at this point, okay? $1,500 just in year 3. Now imagine how much you're going to be receiving in dividends 10 years down the road, 20 years down the road. Like, we could keep working out this chart and you'll see like the numbers get really large. I mean, when you get down to like year 30 or so, you're looking at, $50,000 or so, $40,000 to $50,000 getting paid out to you just in the form of dividends. Now imagine you started when you were 20, and you're 50 years old and you're receiving 40, 50, maybe even more than $50,000 a year just in dividend income, guys. This is how substantial the amounts of money can get, and you can see like that is definitely possible to just invest your way through dividend stocks to basically get a huge income, and then just have a situation where you don't even have to work or something like that. Keep in mind, any of these numbers, these dividend yields and the amount of money paid, if you hold this, like imagine somebody buying into Let's say somebody bought into Coca-Cola stock 25 years ago. The dividend was minuscule to now. I mean, the dividend's probably 10x plus in that amount of time, but yet what they bought the stock at was super low, right? Think about like a Procter & Gamble. What Procter & Gamble was paying for dividends, 25 years ago was a very small amount compared to now. Apple, for instance, Apple didn't even pay dividends up until about 6 or 7 years ago. So if you imagine buying Apple stock, prior to that period, you weren't even getting a dividend. Now you're getting this big dividend, and imagine how much Apple's going to be paying in dividend money out to their shareholders in the future, okay? So that is something to take into account that not a lot of people think about. It's just a mere fact that these companies that are great dividend payers consistently keep upping those dividends. So you might have used to get a 5% yield, but now you actually get like a 25% yield from where you bought that stock at, because the dividend money is so much and it's coming in so fast, guys. So it's something to think about there. It is definitely possible. You can definitely pull it off if it's something you want to do, guys. So I hope you enjoyed this today. Make sure if you ever got that course in the past, my Becoming Master Stock Market course, check that out. There's a new dividend investing mastery section in that course, which is linked down there in the description. We got a discount going on today, guys. Thank you for watching and have a great day.